This video is for anyone curious about the true cost to buy a home in Texas, specifically Denton County in 2024. That's when I'm recording this. It's the very beginning of the year. Happy New Year. Although this will be applicable to really anyone looking to buy a house, even if this is into the future, just know that the cost for the interest rate and the interest rate itself is highly dependent on the time of year, not even time of year, time of day. Rates change all the time. So this is also for someone who does not have perfect credit. So this is set up with a 680 credit score. This is somewhat of the average in Denton County as of the time of this recording for someone buying their first home. So the purchase price is $350,000. Minimum down is how we're setting this up. Anyone with a 680 credit score, really you're going to be looking at a government loan. If you're a veteran, you're going to go VA, hands down. If not, FHA or USDA is going to make sense depending on the area. So this one is an FHA loan, as you might have guessed, and the interest rate on this is 6.25%. So I'm sharing my screen here and I'm just going to jump into it. There's not a ton of transparency, in my opinion, in the mortgage industry. Many lenders, before they will take the time to show you something like this, they want to get an application, they want to pull credit and things like that. I really prefer a transparent approach, so that's why I'm recording this. So let's jump into the fees. This is set up just like a loan estimate would look like, which is what you receive once you get under contract. So to drill through this, I'm starting on the left-hand side. Let me scroll up a little bit. So lender fees. This is the cost for that 6.25% interest rate. So I selected 6.25. It has a cost of $2,160. You always have full control, meaning you can buy that rate down further for a higher cost. You can actually do what I did when I bought my first house. I took a higher interest rate and I actually got a credit here. So this number was negative and that helped with my closing costs. You can always do that. To work down the left-hand side here, whenever you're looking at this section, these are third-party fees and title fees. This is assuming that the seller's paying the title policy and the survey, which is typical for the seller to cover that. It's not always the case. If you look down at the bottom left here, this is the proposed monthly mortgage payment. So to break down what those couple items are, we have the principal and interest, which is just the loan amount times the interest rate over a 30-year period. So this is a 30-year loan. You also have homeowners insurance. This is a conservative estimate. You're always in the driver's seat as far as choosing homeowners insurance. So $180 a month. Property taxes, this is a conservative estimate as well. And then mortgage insurance or PMI. So the total monthly payment for a house that's $350,000, right around that $3,000 a month range. This is conservative on purpose. I would say there's a good chance that taxes are going to come in a little less, but I like to set this up kind of a worst case scenario, if you will. So to look at the right-hand side, we've got some government fees, and then we have prepaids and initial escrow payment at closing. This could be a video in and of itself, so I'm going to be really quick with this. What this looks like is setting up the escrow account and then also paying a full year of insurance premium to the insurance company at closing. So you'll see here between the prepaids and the initial escrow payment, if you total this up, we're actually collecting 15 months worth of homeowners insurance. And so 12 months goes to the insurance company that you choose. Another 3 months goes into the escrow account. With taxes, we collect net 3 months as well. And the reason we do this is the timing of the first mortgage payment. So let's say you get under contract here pretty quick and you're looking at closing in February. You always skip a mortgage payment the month that you close plus the full month after. So if you close in February, you skip February, March, first payment is due in April. It's due on the 1st, but there's always a grace period through the 15th of the month for your mortgage payment. So you can always pay through the 15th at no penalty. So that's why we collect the 3 months in the escrow account for the 2 months that you skip, and then also an extra month just for padding, just in case taxes go up next year or insurance goes up, you have a little bit of a cushion. And then to jump down at the bottom right here, this goes into your down payment. It titles up all the fees, and then you subtract your credits. So I, on purpose, did not put the earnest money in here. Earnest money it's typically 1% of the sales price. So in this case, that'd be $3,500. It is negotiable, but that is by far typical. And so that $3,500 in this case, you would put down towards the house, typically the first 3 to 5 days of getting under contract. And that is a credit back to you, meaning that this cash to close, which is down payment plus closing costs, you will get the $3,500 back. So I purposefully didn't put the earnest money in here because I wanted the true cost of the dollar amount that you need saved up to get into, this property at $350,000. So that total amount is $23,039. So that's the total amount. So in essence, how this really works out is it's $23,039 minus $3,500 that you bring at the very end. If that doesn't make sense, let me know. If you have any questions at all, give me a shout, and thanks for watching.